So it is September 2024. What's going on in the housing market? So the Fed's actually just lowered the Fed funds rate by 50 basis points, which I think is a good thing. A lot of people were expecting 25 basis points. They went down that 50 basis points. I think where does that, kind of hit into the market? I think it makes things a little more affordable for people. It's going to cost a little less to borrow on it. But I think Wall Street and mortgage rates had already taken that into account. I know a lot of people were expecting those 25, so the fact that it's 50 may help interest rates a little bit more. And I think that comes out, with the Fed saying, hey, listen, the economy is good, but it's slowing a little bit. We want to kind of give it a little boost, give it that soft landing, a floor for it. So I'll let the stock market economists really kind of dial that in. But I think for us, we've had strong demand all along. We haven't really lost that. And I think it just kind of carries that through. So it definitely was time for them to adjust it, and I think they finally did. Inflation approaching the target rate, the goal is 2%. I think we're at about 2.6, 2.5, something like that. And I think I heard some projections that they're thinking it probably gets to 2% by next year. What does that mean for more rate cuts? I do think we'll see a little bit more rate cuts, maybe one more time this year, and then we'll see a little bit more, I think, in 2025. So, unemployment rate right now, I think that was one of the biggest factors that made the Feds, cut the rates. It's up a little bit higher, nothing crazy, 4.3. I think they're projecting that it will get to 4.4 or 4.5%. Hopefully nothing major happens in the economy, and we'll kind of see that all the way through. So that's kind of where we're looking for right now. Most economists are expecting another cut this year, as mentioned. I think about 73% of them were expecting, the first one to happen and another one to happen as well. Where do rates go? Right now they're in the low to mid sixes, depending on what it is. They may dip a little bit to that 6 or something like it. If we see another 50 basis points, I wouldn't be surprised that it does get under 6 by the end of the year. But I think you're probably going to see 25 basis points at one more time. And I think we're going to end up anywhere, let's call it from like a 5.75 to a 6.25 is somewhere in there for rates as we're coming out to the end of the year. Jacob Channel, senior economist, lending tree. Time in the market is basically impossible. If you're always waiting for the perfect market conditions, you're going to be waiting forever. Buy now only if it's a good idea for you. I put that in there because I thought that was one of the best slides that I saw, out of this the slide deck, and it's so true. You can never time the market. You can't time the stock market. You can't time the housing market. If it's right for you to buy or sell, sell. Buy or sell. I've told so many people over the last 12 to 24 months, now's not the right time for you to buy, but you know what? You're not willing to go over ask price. You're not willing to overpay for a property. And I've told plenty of sellers, like, hey, listen, it doesn't make sense to make a move because we can't buy anything else. And I'd say to them, if you're good, comfortable where you are and you have that low interest rate, you probably should sell. It's really what happens, for you. What's the most important to you? And what I said in a video, I said that when the life factor outweighs the low interest rates is when people will make a move. And we're starting to see that more and more. Those low interest rates have been around for about 4 or 5 years now. So little by little. People are asking, well, is it a buyer's market or a seller's market? Definitely think it's more of still of a seller's market, but it's starting to inch closer to that kind of stabilization, that balanced market. I do think we'll get there. I think it's going to take us another year and a half to be in that balanced market, but we're in a healthier spot, in my opinion, than where we were in 2020. In my opinion, it was too nuts. And I don't think that's healthy for a housing market or an economy. So as that kind of stabilizes, I think that's better off for the economy overall. Here's something to show from last year. Here's an average. Sellers receiving 3 offers per property in July of 2023. In July of 2024, they're 2.7. Pretty close. I think if we take our local averages, I think we're right there. So I don't anticipate really kind of any change in that. We're seeing from 2020 where we had 10 offers per property. Now we're probably seeing 4 or 5, which is not the end of the world. Inventory across the country is definitely increasing. I just came back from that RE/MAX Torchbearers event, top 5 under 40 per state. And in other parts of the country, they are seeing weakening. They are seeing 6-8 months of inventory on there. For us, we're not really seeing that yet. And I think that's something important to see where we are based on the rest of the country. So price reductions are happening a little bit more. You also see that in September for the properties that didn't sell, that were on the market from the spring. You're going to see a little bit more price reductions come the fall. People saying, okay, now it's time. I tried it higher, it didn't work. Let's get this together. We are still seeing some highest and best already this month as we've seen a little bit more inventory pop as well. One of the things that I thought was really kind of important for us, which metros are sellers market right now? Top 10 metros. The number one, New York, New York. Hartford, Connecticut. We're seeing this. These New Yorks, the Northeast take up the majority of things. Chicago, Illinois. We're seeing some of the weaker markets be Texas, Louisiana, Florida, where there was such a big jump. And I say this, where the house in Florida was $300,000 5 years ago is now $750,000. That's a 150% jump. Where the house over here was $500,000 is now $750,000. That's 50% jump. I think that gives us more stability, and I saw this back in 08, 09, where the markets that went bananas, they were the harder ones to fall. So hopefully, if we do see some stabilization or price decreases, we're kind of in that same realm, which I think we will be. Lawrence Young, chief economist in NAR, says, homes priced right are selling very quickly, but homes priced too high are deterring prospective buyers. Very, very true. In this market, as we've talked about, if a home is priced right, it's moving. If a home is, the home that everybody wants, you're seeing multiple offers on it. I think it's our job as realtors to really go out and say, okay, what makes sense? What do we have to factor in? How is the public going to perceive this? And if we put it on and we're wrong, that's okay. It's being able to adjust, being able to adapt. I'm a big military reader book, Adapt and Overcome. What do we need to do to get this property sold, and how do we get this done? And that's, our job to really advise you. So in September, we're seeing strong market, seeing some highest and best. Just saw a rate cut come out. I'm encouraged to see where everything is. I think we're going to finish off the year strong. Inventory numbers this year, I think, will be down, but I think we're going to start to see a little bit of that turn up, where at the end of 2025, we're going to see a little more stabilization in the market. So any questions, feel free, shoot me a DM, call, text, email, whatever it is, smoke signals, Geico Plane, and we're happy to help.